Good morning, traders. This is Tony D from easyMarkets in Sydney. We've got another interesting year ahead of us. We've had the first day of trading, and the US dollar has continued to be sold off. Now, this leads into almost 3 weeks of US dollar selling, gradual, but definitely noticeable against every pair. Now, what's the main story here? The main story is that a lot of the Fed tightening has been priced in. There's a bit of a relief rally on the US dollar almost straight away. Against the US dollar almost straight away after the Fed raised rates, and it's continued. It looks like there's two dissenters, and we're going to get confirmation on that with their FOMC minutes coming up today, later in the US session. But basically, if there's two dissenters on the rate hike in December, perhaps it won't be such a cozy road here to get the 2 to 3 rate hikes this year, especially if there's any hiccups. Let alone there's reasons to be selling the US dollar or buying the euro in the very least at the moment as well. What's going on? And this is a little bit of a more complicated concept, but I'll run you through. Basically, what happens is that at the moment there's a lot of emerging market currencies that are getting a lot of support. So if you're putting money into Indonesia, or you're putting money into Russia, or you're putting money into Malaysia, what that leads to is a lot of buying of their local currencies and a lot of selling of that US dollar. And now, to support their local currencies and try to keep the local currencies weak, a lot of these emerging currency countries, banks, central banks, they buy dollar Malaysian ringgit or dollar Singapore, dollar Chinese yuan, or dollar Russian ruble. And these buying of the dollar by these central banks leads to a huge exposure of US dollars on the books. And a lot of central banks these days, they want to have a much more balanced portfolio of currencies. All right, so there is what you'd call reserve managers. They end up using all these US dollars that they've bought, and they recycle them, and that's the term that's used. Recycle them into the euro, into the Aussie dollar, into the pound, but mainly it's a recycling into the euro that's been driving some of these moves lately. And if you see that the US dollar continues to be weak, there's a reinforcement here, because all these US dollar being weak against all these emerging currencies leads to more central bank intervention, which then leads to more US dollar selling against the euro in particular. So we care mainly about the euro and where it's going. It's right back at that 120, 60, 70 resistance from last year, which is the high. If we break that, then it opens up the door to 125. So there's a fair bit of room here. And a new year, new trend is definitely something the market can get a hold of. And if we were to see that happen in the first week, it's going to be very hard to slow it down or stop it, and very little reason to be looking for other big moves or other new trends. And as a trader, your job is really just to get on trends rather than to question what the market's doing. It definitely has room here to move to 125, 130 this year. It's more of a matter of timing than anything else as ECB approaches the end of its QE. It's already been mentioned a few times by some, definitely the Germans, that they don't want the extension done past September. So we'll see exactly how it plays out. Of course, Draghi is notoriously bearish, and any opportunity he gets, he will be looking to talk down the euro. But sometimes that is, and you're seeing the reaction to the Draghi getting less and less. And if the market wants a big new trend, the euro is definitely going to be involved in it. You're seeing the US dollar selling accelerate against gold. So gold's now broken well and truly above 1300. Got to 1320 overnight. Pretty strong moves, pretty sharp moves. Like again, not too much story here apart from the US dollar weakness. It's getting on 2 weeks. RSI is a little bit high. The only reason to be slowing down here in these trends is the overboughtness in the short term. And also, with the NFP coming up on Friday, you've got to be a little careful that you don't get whipped out, or the market doesn't play funny buggers on a strong number, which can definitely happen because, positioning like this is dangerous short term. But definitely longer term, it's showing you the new direction that you want to be. You just want to get a much better level. So it would be actually convenient for us as traders if we did get some US dollar strength for a day or two, so that we can get some nicer levels to get involved in some of these new trends that are emerging. The pound itself hasn't really broken out the previous highs from 2017. Positioning wise as well, it's got a bit of room to move. It can actually, it was pretty sideways trading for a while. And what we've seen here is that The appetite for traders in that little 3 or 4 week sideways trading, a lot of traders got out of their position, so the positioning went from really stretched long to a little less. Now gives us a bit of ability for new trades to be built up into the long positioning. We still got to get past this 136.60. Once we get past that, we'll be talking about the 140 level, which would coincide with the euro talking about 125. Makes a lot of sense. Similar note, Aussie dollar, if we can get it back above this 78.50, more than likely, given that 77.50 has been broken, we'll be talking about 80 cents. That'll be the trend targets there that you get going forward. Now, oil is well supported on Iran news. You've seen, the tensions developing in one of the world's largest oil exporters. Lots of protests there on the ground. Now, something to keep an eye on, especially if US and Western countries, be seen to support the protesters or they continue. They've already turned deadly, but they, still at a scale which, and you haven't seen the government crack down on them yet. So, there's still at a scale where it can get a lot worse. But at the moment, there's just small tension there. Definitely something to keep an eye on though, because the oil's already in an uptrend, and this is just giving a little bit more fuel to the fire. All right, traders, it's a new year, so you're going to have lots of questions about what your favorite pairs are. Come through to the dealers, ask me or Russell Sandiford here which or whatever pair you like to trade. We can talk to you about the fundamental macro outlook, also the technicals on the short term as well. You can contact us on the numbers below. If you're not a member of the dealing room here in Sydney, open up an account at easyMarkets, and we should assign one of us to help you out. Thank you.